Assalamu alaikum. My name is Mahmoud Akbar Afridi, and today in this video I will be telling you about bank reconciliation. So first of all, this comes in ACCA. Okay, so your bank statement says you have $5,000. Your own record says 4,200. Who's right? Actually, they might both be right, just not yet in Cynic. Okay, Sanic means like the data might be not entered. Today we are breaking down bank reconciliation, one of the most practical topics in ACCA and one that shows up in exams constantly. So let's go into it. Okay, so now, welcome back to the channel. I'm continuing my journey with you, and today's topic is bank reconciliation, a core part of the syllabus under accounting for cash. By the end of this video, you will understand why differences happen between your cash book and your bank statement and how to reconcile them like a pro. Let's dive in. So first of all, what is a bank reconciliation? A bank reconciliation is simply the process of comparing the balance in your business cashes book with the balance shown on your bank statement and explaining any difference between the two. You would think these two figures should always match, right? Yes, obviously everybody would think that the both should match. After all, it's the same money, because whatever is there it should be shown, but in reality they rarely match on any given day. Okay, they match very rarely, and that's completely normal. The goal of reconciliation isn't to force them to match immediately, but to understand and document why they differ, why difference occur. The main thing is this. Okay, there are two main categories of difference: timing differences. Okay, these will eventually clear themselves. Unpresented checks, you have written a check and recorded it in your cash book, but the recipient hasn't cashed it yet, so it hasn't hit your bank statement. Like obviously there might be delay of due to some reasons in the bank, or the banker or the accountant, he might be busy in doing something, so he might say that okay, after a few minutes I will do this. Outstanding lodgements, also called deposits in transit. You have recorded money, received and banked it, but the bank hasn't processed it yet. Okay, errors or items only the bank knows about, these need to be added to your cash book. Bank charges and interest, the bank deducts fees or adds interest, and you often only find out when you see the statement. Okay, standing orders and direct debits, automatic payments, the bank processes that you may have forgotten to record. Yes, obviously. Dishonored checks, a check that bounced, meaning the money you have thought you had isn't actually there. Yes, sometimes like bank reconciliation, this is, we could say that this is just a normal human errors, that is just because of us people, or some things that we don't remember. So these over here, some specific people, they deal this, and as well we could say that due to some mistakes this happened. Okay, the reconciliation process. Okay, update the cash book first. Add anything the bank statement reveals that you did not know about. Bank charges, direct debits, dishonored checks, interest received. Okay, this gives you your corrected cash book balance. Okay, prepare the bank reconciliation statement itself. Start with the balance per the bank statement, then add back any outstanding lodgements, deduct any unpresent checks. If you have done it correctly, this adjusted bank statement balance should now equal your corrected cash book balance. That's your reconciliation complete. Why this matter? This isn't just an exam topic, it is really controlled procedure. Bank reconciliations help business catch fraud or unauthorized transactions, errors in recording, missing income, or unexpected charges. In the exam, you will often be asked to either update the cash book, prepare the reconciliation statement, or both. So make sure you are comfortable with each sides. Okay, now let's be back. Okay, bank reconciliation compares the cash book to the bank statement. differences are usually time relating. Yes, because banking is a very big industry to be in, and obviously every company, every bank, they try to have zero mistake. And yes, obviously every company who are related, linked with one bank, they always expect that there will be zero mistakes, because money is important, money is important. Okay, bank reconciliation and differences are usually time related, so because of time sometimes it happen. Okay, and yes, even one thing, for example, sometimes I have seen that if someone sends you a message from another country, and I would say that over there it is Sunday, and in your country it's Monday. Okay, because due to the time differences in the world, and you get frustrated or you get depressed that where's the money gone, I haven't received any message. So usually it's just because of the message, it isn't Monday, there's no working day, so that's why. Update the cash book first for anything the bank reveals. Then reconcile the bank statement balance to match. So now get comfortable with this topic. This is all about bank reconciliation. Thank you for listening.